Hi, and welcome to the Stockscores Market Minutes for April 27th, 2015. Today I want to talk about buying stocks on sale. Everyone likes a deal, but there's a big difference between buying a bargain trade and a bad one. We want to consider stocks that are in long-term uptrends when we are buying weakness. It's not the smart thing to do to buy weakness simply because the stock is down. We want to make sure that it's in a long-term environment of optimism. So if you have weakness in long-term optimism, that's how you can buy stocks on sale. Don't buy stocks that are in a downward trend and getting weaker. We want to buy weakness when the stock comes back to the long-term upward trend line. And at the same time, don't chase stocks to the top of the channel. What do I mean by that? Well, here is a stock that has been doing well for some time, and the blue circles are where that stock was a good buy on weakness. It had come back to the long-term upward trend line. The red circles are when the stock had run up and away from the trend line. And this is typically when I get people emailing me saying, should I buy the stock? They get swayed by the fact that the stock is strong, that it is running strong, and they think, I got to buy the stock or I'm going to miss out on it. Well, when you buy stocks that are running away from the uptrend, you typically buy them just before they pull back. So wait for the pullback, buy them on the pullback to the trend line. You'll get those good, strong stocks on sale and avoid having to ride out those pullbacks that happen. All right, let's do the market analysis for the week. It was a good week for the stock market. We had a rally in the US markets in particular, and the NASDAQ market actually broke out to new highs. The S&P is just underneath those highs. You can see that it rallied up to that on Thursday and sort of hovered underneath it on Friday. So generally we have a good optimistic market. I wouldn't say there's a lot of strong volume, not a lot of enthusiasm yet, but it's something that could happen very soon. We could get a breakout in the next week or so. So keep an eye on the S&P 500. That's the short-term chart. The long-term chart shows that break from a flag pattern in the long-term upward trend. So we've had a pullback, didn't quite come back to the upward trend line, so we could still see some hesitancy by the buyers, but I do like that the market is breaking to new highs on the weekly here, and that should point to more upward trend in the near term. There is the Russell 2000 in an ascending triangle pattern. It didn't keep up with the large cap stocks this week, so it seems that the market is back on buying the large caps, largely because their earnings came out. A lot of their earnings were better than expected, and that is where the money went this week. It wasn't in the cheaper stocks, it was in the higher price stocks. Having said that, this chart is still a strong one, something to watch for a breakout soon. Here's a chart of the TSX 60 on the short-term 60-minute chart going back the last 30 days, and you can see that the market's more or less been going sideways for the last couple of weeks. A little bit of an upward bias this week. We can see the rising bottom form there, but in the longer-term sense, it's still stuck underneath that resistance, and we need that breakout through that red line of resistance to happen. Now, given that there's a heavy weighting of commodity stocks on the TSX, this is a pretty impressive showing for the TSX because there is still money seeking stocks in Canada despite the fact that the energy names aren't all that strong. There's the TSX Venture. It's been stuck in a sideways range. A real heavy weighting, about 65% of this index is commodity-based stocks. But again, you see that at least there's stability here. And if we get a breakout through that red line, it may be that that market finally starts to catch a bid. The US Treasuries, which is the bond market, is still in a long-term upward trend, but having made a falling top, it does look like it's going to test that long-term upward trend line, and we could see a break of that long-term upward trend line in the months ahead. If the U.S. Federal Reserve starts to raise interest rates, my expectation is that we will see that break down. But for now, it's still a long-term upward trend. I think you have to be cautious because of the falling top. U.S. dollar is in a long-term upward trend as well. It really ran away from the trend. You can see the trend went parabolic up here in the second week of March, and then we formed a falling top second week of April. And it looks like we're maybe going to break down through this steeper or higher upward trend line and maybe retest this one here. So very crowded trade, so many people long the US dollar, and because of that, I think the buyers are just tired. It's not so much that there's fundamentally anything wrong with the US dollar. In fact, everything is right with the US dollar relative to other currencies anyway. But in the strictest sense, the problem is the buyers are tired. There's so many people that have bought this market, and now maybe they're going to have to start to sell and take some profit. Gold broke down this week. It looks to me like gold wants to go lower, so I remain bearish on gold, and in fact in the short term I'm going to switch my rating from neutral to bearish because of that downward break. Oil is stable, and it's easy to look at this and say, wow, oil looks actually pretty good, given that it's been rallying for the last 6 weeks and really just come up to resistance. But we shouldn't forget big picture. Oil is still in a very steep long-term downward trend line. And so it has a lot of work to do to get back in the upward momentum. So for now, I mean, yes, this is encouraging, but don't get too optimistic. The long-term chart on oil is still poor. Here's the VXX. It is the fear index. You can see that it's basically at lows. The only thing here that you have to really be aware of is that the market looks a little bit complacent. And complacency can sometimes lead to some real volatility in the market if something goes bad in the world. If if there's some kind of a terrorist attack, or if there is a big financial issue in the world, that can be the catalyst that causes a big correction, because the market really has bought no protection against such a correction. Everyone is optimistic and fairly bullish on the market, and really complacent about the potential for a pullback. So by no means am I saying sell stocks, but just realize that there is a risk factor in the market, in that the market is complacent. So my ratings end: bullish short-term and long-term on US stocks, neutral in the Canadian market, bearish on both time frames in gold, bearish long-term on oil, neutral short-term. US stocks are moving up through resistance. This could be the start of a new leg in the long-term upward trend. Canadian stocks are showing resilience despite the weak commodity market, and gold looks like it could get weaker, while oil tries for stability but still remains in a long-term downward trend. That has been the Stockscores Market Minutes for April 27th, 2015. Have a great week in the market and trade well.